McDonald's is making less money because Americans can't afford Big Macs anymore. And no, this is not a video about McDonald's. This is a video about what's going on in our economy and what McDonald's just told us about some worries that they have about inflation and our economy. So McDonald's just reported their earnings yesterday. And what they said is that for the first time since 2020, same-store sales fell. And the reason why sales in McDonald's stores in the United States have been falling is because inflation and a slowing economy. Let me just read you a quote directly from the president of McDonald's United States. What he said is, quote, "At the end of the day, we expect customers will continue to feel the pinch of the economy and a higher cost of living for at least the next several quarters in this very competitive landscape." What is this competitive landscape? Well, it's businesses competing for low-income customers because for stores and restaurants like McDonald's, a big portion of their customers are low-income Americans, and we're seeing a growing competition between businesses fighting for the limited dollars of low-income people because those dollars are being stretched very thin. And this is where we're starting to see a very interesting dynamic, especially between the fast food chains, because we're seeing low-income Americans run out of money versus richer Americans are spending more money. So what does that mean? Well, we've seen McDonald's, Taco Bell, Burger King, and Wendy's all very recently come up with their own version of a value menu or revive their $5 value menu thing as a way to attract lower income people with lower discount prices. And the reason why this is interesting is because now in 2024, we're seeing this growth of discounts again. For the last almost 4 years, we didn't see that. There was no need for discounts because people had money, or I should say people were spending money, even if they didn't have the money and they felt comfortable doing that. 2020, 2021, we were filled with pandemic dollars, stimulus dollars, unemployment dollars, PPP loans. I mean, there was a lot of free money floating around 2020, 2021. That trickled into 2022. 2023 was a year of spending on credit. Credit card debts broke new record highs. Home equity loans were breaking record highs. Cash out refinances were breaking record highs. I mean, 2023 was a year of people just now continuing to spend money because they didn't want to cut back on their lifestyles. 2024 now is we're starting to see the next phase, which is people are saying, I can't keep affording spending this money. I am maxed out on my credit card. I need an alternative, and that alternative is a discount, which is why you're seeing so many companies now starting to change their pricing models. But this has some consequences as well. And of course, there's good sides to this because that means you might be able to find a discount, but there's also consequences to this which have to do with, well, how this can impact the business. For example, Subway used to have a $5 value menu, and that was great for consumers, but that ended up hurting the business. So let me dive into what's going on here with what's happening in the economy, what's happening with Americans, what's happening with businesses, and what might be coming, because I want you to really understand the landscape of our economy because we really don't get real data on this. You have to kind of extract this from what companies are telling you. So I want to go over that in this video. But I want to give you a couple things. Number one, I'm in Manhattan right now, which is why I have this different backdrop. And I apologize, the last couple of videos on YouTube, for whatever reason, got cut off early. So I apologize for that. My team is trying to figure out what to do about that. And secondly, I want to remind you that on August 15th this year and August 14th this year, we are hosting a live investor summit hosted by me, where I'm going to be going over, number one, how our money has changed over the last 5 decades and over the last 5 years. But even more importantly, number two, I'm going to go over how you can build wealth in this changing economy where we're seeing a slowdown in certain parts of our economy. We're still seeing the higher interest rates. We're seeing the impacts of inflation compounding. I'm going to be going over investment ideas on how you can build wealth in this changing economy. It's completely free. If you'd like to join, all you have to do is register, and I got the link for you down in the description below. So for those of you who are Subway fans, well, gotta go to Chipotle or Sweetgreen. Anyways, if you were a Subway fan, you might remember that Subway used to have a $5 footlong. Well, what happened to that $5 footlong? That $5 footlong brought in a lot of customers, but the people that did not like the $5 footlong were the owners of the Subway franchises because it really cut into the profits. And so what ended up happening with this $5 footlong was, after it destroyed a lot of profits for a lot of businesses, a lot of Subway businesses, it created a lot of issues with the brand, and then it was very difficult for Subway to raise the prices and quality of their subs, which then kind of helped hurt the brand. Shouldn't say helped hurt. It hurt the Subway brand, and it took them years to kind of get out of that rut. So when you get caught into this spiral downwards of just finding discounts, it can hurt quality, it can hurt your ability to continue growing, and it can hurt the operator's profits. And so now when you have companies like McDonald's now saying we want to input or create this $5 value menu and keep this going for longer, it can be very difficult. In that particular instance, with the $5 value menu promotion at McDonald's, there was a lot of pushback from the operators of McDonald's because they were worried about how that was going to hurt their profits, and they weren't able to get that approved. So in order to impose this $5 value menu, McDonald's had to partner with Coca-Cola, and Coca-Cola had to subsidize this $5 value promotion in order for it to actually work with the operators. Because remember, McDonald's, the corporation, doesn't own every single individual store. Some of these stores are licensed by small business owners, people that want to create and run their own McDonald's franchise. And so now if you're somebody who is licensing a McDonald's store and you're being told by your boss, the higher corporation, that you have to sell these things at $5 where you're not going to make any money, it can eat into your profits. And if you're not making a profit, it can be very hard for you to run a business. And so this is where we've seen that pushback. And we've also seen a pushback from investors, because if you're an investor, you own a piece of the entire corporation. And if the corporation is making smaller and smaller profits, well, that means your gains are also going to be hurt. Your dividends might get hurt. Your stock appreciation might get hurt. But for the McDonald's corporation, what they want to see is people at least coming back to the company. You want to see people going to McDonald's and not Taco Bell. They want to see people going to McDonald's and not Burger King. And so it's a balance here where the McDonald's corporation is trying to figure out how can they continue attracting the customers but also making money. Because the difficult part here is there's a war for the low-income customer, because the low-income customer, the low-income American, is running out of money. They're running out of ability to keep spending money. And if they don't have the ability to keep spending money like they could before, you have more and more businesses that are now fighting for their limited dollars. Now, competition is good for the customer in terms of price, but it can hurt quality, and it can also hurt what types of things you might be seeing. So we have this competition now heating up for that low-income customer, and we also have a very different story on the higher income American, because the higher income American or higher earner is still spending money like crazy. We've seen in the most recent reports from Delta and Hilton that sales are growing, even though Delta has come out and put out warnings that we think that sales in 2024 are going to be shrinking. We're worried about what's going to happen in 2024. This is what Delta has said. But people are still buying flights. People are still staying at hotels. People are still going on vacations. People are still traveling, even though the CEOs of some of these higher end companies have thought the sales would be falling. So it's something you want to pay attention to, because we're seeing the shift in the lower income American very clearly now. For the middle and higher income American, we haven't fully seen it happen because it looks like people are still spending money like crazy. But the reason why this matters for you is because we're starting to really see the impacts of that compounding inflation. The reported inflation numbers over the last 5 years have been that food prices have grown by around 25%. That is the reported number for food inflation. However, for the average person, a couple things have happened. Number one, for the average person, they haven't seen their incomes rise by 25%. The second part of this is for the average person, you've actually been seeing food inflation even higher than that. I mean, if you like Five Guys, you know that Five Guys food is a lot more expensive today than it was back in 2019. So for the average person, they're seeing real inflation much higher than the reported numbers, but incomes haven't even kept up with the reported numbers. And it's not just that we've seen inflation in food, we've seen inflation with everything. I mean, home prices are up 40 to 50% as the reported number across the country. Many people have seen higher housing costs than that. But if your incomes haven't kept up with the food inflation, which is 25%, it definitely hasn't kept up with housing inflation, and everybody needs a place to live. Not to mention, car prices are a lot more expensive. Although car prices have fallen in the last 12 to 16 to 18 months, we have seen a drop off in car prices. It's still a lot more expensive today than 5 years ago. And in addition to that, everything else that you buy is a lot more expensive. So what does this all mean? the compounding inflation is now starting to burn a hole in a lot of people's pockets. When I say compounding inflation, what I mean by that is we saw inflation in 2021. That inflation in 2021 then got compounded with 2022 inflation, which then got compounded with 2023 inflation, which then got compounded with 2024 inflation. And so now what we have is all this inflation that kept building and building and building the prices of things higher. And this is where the Federal Reserve Bank, which is the central bank here in the United States, is saying that we've essentially are very close to winning the inflation fight. In fact, in the next 24 to 48 hours, July 31st, we're going to start hearing from the Federal Reserve Bank as to what they want to do with inflation as the next steps. A lot of people are predicting that the Federal Reserve Bank is going to hit at cutting interest rates in September because they feel that they have won this fight on inflation. But what does it mean to win the fight on inflation? To win the fight on inflation does not mean to reverse prices back to where they were back in 2019. Winning the fight on inflation means the prices of things keep going up from here, just not as fast as it was last year. That's what winning the fight on inflation means. The Federal Reserve Bank says that they want a 2% inflation target, not a 0% inflation target to keep the prices of things the same, not a negative 5% inflation target to try to bring things back to normal prices as to what a lot of people would consider normal. Winning the inflation war means the prices of things grow by 2%. We are not at 2% yet. We are still above that. And the Federal Reserve Bank says that because we're on target, on track to eventually hit 2%, that we've essentially won the fight on inflation. The prices of things are still growing more than 2%. But because we're in that direction, then we might as well start cutting interest rates. And the problem with that is, well, cutting interest rates benefits some people while hurting others. Everything has a winner and a loser. Inflation benefits some and hurts others. Americans going into debt to buy a bunch of dumb things benefits some people and hurts others. This is where I am so kind of fired up about understanding our economic system, because every single person in America is a part of the economic system. But almost nobody understands how it works. Our economic system revolves around you spending money. When you go into debt and spend money to buy a bunch of dumb things, you look rich, but you make somebody else rich. You look rich because you got a nice car in your driveway, you got a big home, you go on some fancy vacations, and your Instagram page looks amazing, but the person that gets rich is me and other investors, people who understand the system. And I'm not saying this, I don't know, I'm trying to say this to get you to understand. You got to understand the way that the system works. This system is designed to keep people poor, and the system is designed to profit off of people that are poor financially. But it's also great because if you understand the system, you can win in this economic system. If you understand the system, you can win because you understand how to invest your money. Investors benefit from inflation. The average person doesn't. Inflation is going to keep happening, and it has been happening for a long time, and the average person never saw it coming. That's why the Federal Reserve Bank wants 2% inflation, because 2% inflation is low enough that the average person doesn't see it day to day. When we had 9 or 10% reported inflation, yeah, that was high enough that people are going to see an impact of that day to day because that was high enough for that. So the Federal Reserve Bank doesn't want that. But 2% inflation, day to day, it's not that noticeable. It still helps the investor. More dollars are going into businesses, more dollars have to go into the assets. But it's not enough to make you really question what's happening in the system. And this is where it is so important for you to understand this. That way you can build wealth. That way you can understand how our economic system works, because investors are the ones that win. And in order for you to be an investor that wins, you have to be financially educated. You have to be prepared financially to take advantage of opportunities. And you have to understand the trends that are happening in our economy. This is why I built Briefs Media as a way to help provide this financial education. That's what we're going to be going over on my investor workshop. That's what we discuss in market briefs to keep you updated with what's happening in the economy. But it's crazy to think that most people are playing this game of money without any understanding of how money works, without how our economic system works, without how to build wealth. And then you're going through the game, you're playing the motions, and you're making other people rich, and you never wonder how you can get out. And this is where I want you to understand how you can get out, how you can build wealth. And the way that you do that is by stopping spending all of your money, stop going into debt to fund consumer liabilities, meaning things that don't make you any money, buy assets, stack cash flow, make some sacrifices, earn more money, buy more cash flow, build wealth, and then buy all the dumb things that you want because now you can afford the price. See, there's nothing wrong with buying nice things and expensive things. I want you to have nice things. I want you to have the expensive things. I want you to have the luxury things. That's the beauty of our economic system, that we can produce, create, and have these things. But the second part of the sword is everybody wants to have it now before they can afford it. Well, if you want it and you can't afford it, we will finance it for you. That makes somebody else rich. It keeps you poor. There's a duality here. I want you to have the nice things, but also be able to afford it. I want you to have the cake and eat it too, or whatever that metaphor is. But in order for you to do that, you got to make the sacrifice and you got to understand how this works. That's what financial education is all about. And this is where I want you to pay attention to what's happening in our economy, because we are seeing a shift in our economy, particularly with people that are making the lower incomes. We're seeing businesses talk about this very openly. McDonald's is talking about it. Listen to what Burger King is saying. Listen to what Wendy's is saying. Listen to what Taco Bell is saying. Understand what these companies are saying. Understand what Walmart is doing. Pay attention, because it gives you an indication as to what's happening with our economy, because economic data is slow. But companies have to report what's going on much faster than the economy, because those companies are in the business of making a profit. And so they have to have their pulse on what's happening, and they can give you a good indication as to what's happening. And you as an investor want to pay attention to this. That way you can find the best opportunities for you. Again, I'll be covering this in my Investor Summit. And with that, I'll see you tomorrow.